let's wait for a moment so everyone join. I saw the link sent out right now. So where are you guys watching us from? Let me know in which country. And please let me know if you are new on the webinar here, or if it's your second time, your third time perhaps, maybe more. I see familiar names on the screen, to be honest. So Nick, all good, great. Hi from Germany. Muna from Denmark. Kelly from the UK. Nick, this is my fourth time. Nice. From Canada. T. Alessandro. Hello, my friend. Third time here. Denzel said, had to leave last time, so first time today. Nice. Annie from Cyprus. I'm also based in Cyprus. T said new from Poland. Somebody else said awesome. So let's make sure that everyone understands that this webinar is for market analysis and educational purposes only. So neither myself or Elevating Forex host any doesn't give any personal or let's say financial advice on this webinar. Vivo from India, welcome to the webinar. So for those that see me for first time here, I'm this gentleman on the circle on the picture here. My name is Theo. My surname is Theodorou. If you put it in Greek, it's Theodoros, Theodorou. It's like the same name, same surname, only the last letter changes. So yeah, that's a bit weird. For those who might want to ensure that I'm a real person, yes, Jay, I'm Greek. I'm Greek Cypriot. I have my social profiles on platforms like LinkedIn, on Instagram, so you can see that I'm the same guy over there. And let's start with our chart analysis. So Euro US dollar. Did anyone take some trades based on the analysis we do here last week? For me, it was one of the biggest week, to be honest, not only in profits, but also it was very, very active week because a lot of opportunities based on the price action setup that I teach you on the webinars here. That's the same way I trade myself. So let's start with the weekly chart. What happened last week? We saw the price made last week a new lower low, but we said, okay, it's at an area of support. There's another support here. So at some point, we definitely wait for the price to move upwards. And for those that were on the webinar here, I said that last week we were expecting a strong euro because I explained you the news events they could affect the euro, and the euro was suspected for strength. It was the fourth week that the price was declining with lower highs and lower lows on the weekly chart, and we said that yeah, at some point maybe this is going to be a downtrend on the weekly chart, but at some point the price is going to move upwards. But on the hourly time frame, 4 hour, 15-minute chart, 30-minute chart, doesn't matter the time frame, guys. You're going to see higher highs and higher lows. And that's break of structure, change of market direction, and why not to take the trade. Now, it's a bit confusing actually at this moment because the price started making higher highs and higher lows. It created a false breakout here, and then that's the swing low. The market declined. Okay, so the market made a lower low here. It's not a confirmed downtrend because a downtrend requires 4 points. I often see traders that they draw their market like this. Okay, here is the low. The market create a lower low. This is the high. So we have a lower high and lower low. That's a downtrend. That's not a downtrend. That's a potential downtrend. The downtrend will be confirmed if we're going to see green candles around this point here, and then we're going to see a break of this swing low here. Then and only then we're going to have a confirmed downtrend. But saying that, we can trade on this anticipation of the downtrend. Guys, do you understand what I'm saying here? Or I'm the only one who understands what I'm saying here? Okay, so yes, okay, good. So what do we expect it to happen next week? We expect the price to decline until first at this level of support, and if it breaks this level of support, until the previous week's low. So if we're going to see continuation of this one, definitely we want to look to keep selling the euro against the US dollar. Now, how to sell the euro against the US dollar? We're going to use price action setups, right? Bearish engulfing or high test candles. I share many times these chart patterns. If you haven't received them, let me know and I will manage to send them over to you as well, because they are powerful price actions, and these are the bread and butter, I believe, in everyone's arsenal. Okay, so if something changes, we will see the price making higher highs and higher lows, guys. Okay, now for those who might not be aware, let me bring this in front. On Tuesday, we're gonna have the presidential elections in the US, which means that the market, they're gonna go crazy. Have you ever seen I think all of us, when we used to be small kids, children, and when someone was telling us, hey, I have a basket full of candies and cookies, chocolate cookies, obviously, not gluten-free or vegan at that stage. Yeah. So would you like to get them all? And we were going nuts. That's how similar the markets will move on Tuesday and to be honest, and on Wednesday, because we're going to have the FOMC minutes, interest rates in the US. So guys, every single week I prepare a text. It's about 5-6 paragraphs, and on every week I explain what it's gonna happen and how, based on the expectations, how we can trade the market based on this. Okay, so just briefly, it's something that I incorporate when I send technical analysis on in hedge funds, in prop trading firms. So on Monday, the markets, they will be trading as normal. Actually, on Tuesday, so 2 days out from today, primarily in the US dollar, it's going to be very volatile. I don't know how the brokers will position spreads and liquidity. That's not something that I'm aware. So just be careful with your trading sizes. Also in Australia, interest rates on Tuesday. In Switzerland, unemployment rate, it's going to affect the USD Swiss. In the UK, something there. Major events, it's going to be on Thursday. Retail sales in the Eurozone, it's going to be interest rates in the UK. They are about to cut rates, so the Great British Pound is going to be very, very volatile, and we're going to try to trade Euro Pound, Pound USD, and Pound JPY. Also at night, so 2 days after the presidential election, in the US, they will report interest rate, telling you the markets, they're going to go nuts. Okay, so be prepared of that. Be careful when you are trading. And Caddy, I would like to, so that patterns I'm new. Guys, if you, in case you, let me copy this one, just 1 second. You can send a message at Giles at support, or you can send me a direct message. Either way, it's fine. Whatever is more comfortable for you and more and easier for you, to forward you those slides that I share. I share the stuff. We'd like those funds. As Sam said, the 4 hour is still on uptrend. Why we go short? Good question. Now, guys, it always depends on which time frame. This is a great question, and this is one of the questions that many traders, they have. Trust me. And if you try to trade yourself, this is the most important thing you need to understand in trading. The time frame serves the purpose of market structure that you, the trader, are able to watch. What do I mean by that? If I'm a trader on the hourly time frame or 15-minute chart, I have to use the trends they develop on that time frame. If you are trading the 4-hour time frame, or you are using the 4-hour as your guideline, then you have to go with the pattern of the 4-hour. If based on your analysis, the 4-hour is up, based on the swing analysis, the 4-hour is not up, but also is not down. Why is that? Because the market did this, then the market made a low here, the market made a high, and it made another high here. So this is the last high, this is the low here, and the market broke below the swing low. So the market ended the uptrend. Very important. The market just ended the uptrend. The market is not in a downtrend, but also this uptrend here is done. It's over. Okay. In Europe, we should say over, but I used to live in Australia, and there I learned to say it's over. Okay, so it's the same thing. So I hope that's clear and that makes sense. Esams asked, and the price already at the fair value gap, so might reverse when continue the upward move. Absolutely, it's possible. Okay, but in which fair value gap are you referring to? Because here now there is no fair value price. It's not fair value gap, it's fair value price. Let me just make clear about the fair value gap that you read on Google. Let me show something to you. So this is the analysis I will send tomorrow, one of the pairs that I will send tomorrow for a hedge fund. Okay, this is the futures of the DAX 40 or German indices. And why I put it that in front of you now, to explain you what is a gap. A gap, there are 3 gaps in the market. There is the breakaway gap, there is the runaway gap, and there is the exhaustion gap. Okay, every time we see a gap, it means the closing price and the opening price of the last 2 candles, they have a separated distance between them. I know that on YouTube, those guys that they also don't show their face, they invented the smart money concepts. And if you read the Wyckoff methodology, you will understand that it's pretty much not something new. And what happens if there is a price that a candlestick like this bearish here, and they say, okay, we take the last 3 candles and we see the, let's say, empty space here, we say that there is a gap. There is no gap here. These candles, if you look at NinjaTrader or Sierra charts or Jigsaw charts, you're going to see that the order flow here is intense and it's massive. this candle formed because of the significant imbalance between buy and sell orders in the market. Okay, so if you understand really the market dynamics, you will know how to speak about the markets better, and the way you're going to speak about the markets, that's going to give more clarity and help you to trade the markets. Trust me. Will be good days for trying past prop firm or better weight? Absolutely will be a good trade, Alessandro. Chris asks, hi Theo, can you share access to your analysis and chart pattern, please? I can share access to some of the chart patterns, but guys, the analysis I make is I have it, either I sell it to prop firm, hedge funds, or I have it under subscriptions. So I'm sorry for that, but I cannot just share it like this, because for those, maybe I didn't explain exactly what I do in the markets. Besides the trading, I'm also a certified market analyst, and I put a lot of hours during the day and during the week to create this analysis in a way that it's going to be helped. So if you need to access them, better send me a message and we will try to sort out something for you guys. Do you hear passing funded accounts? I'm learning how to trade. I can teach you how to trade. I can teach you all the aspect of how the prop firms, I work a lot with prop firms, so I can explain you and help you, give you some tips on how to move forward with them. Fair value gap on the 1 hour. Okay, so let's move forward. Let's go with the Australian dollar, US dollar. Last week, what did we say? We said that the Australian dollar was the weakest, one of the weakest and perhaps the weakest currencies. And based on the last week's news events, we said last Sunday that we expect the weakness of the Australian dollar to continue. So we said, let's wait for the break of the previous week's low, and then comfortably we're going to look to go short on the Australian dollar. Okay, so here personally I managed to do some trades. You see, even on my chart I have it as a fair value price, guys. Okay, I look for these empty spots in your understanding, empty spots here, but this is a fair value price. Okay, we want to perceive this as the price on the chart that the market is going to be optimized about it, and it's going to respect it as a price of value, all right, rather than a gap in the market. So the way I teach and the way I trade is basically with bearish engulfings in a downtrend. We identify on the weekly chart that we're going to go short. On the hourly time frame, the market was making lower highs and lower lows, found here a bearish engulfing, entry here at the low of the bearish engulfing because it was very narrow, it was very short candle. That was during the New York trading session. Okay, entry here, stop loss a little bit above there, just 12 pips plus the spread, and I think 2 to 1 or 2.3 to 1, it was this one. Okay, so that was just simple trade. That's how we're trading. The next day on Tuesday, it was something that it's very tricky in the markets. If you learn how to read the markets based on the price action, you will find a lot of, in my opinion, a lot of success as a trader. A bullish engulfing reversal, when it found, let's say, at an area of support, it's a strong, very strong reversal pattern. But if a bullish engulfing doesn't follow through and the next candle, it shows that, hey, I'm not moving higher, in the context of a downtrend, we have to be brave enough and take the short position and don't worry about it. Whatever is going to happen, it is going to happen. All right. So that was another trade that it took. It played out the day after. And I think that was another 2 to 1, 2.3 to 1. Okay. afterwards, the market stopped. Look at these guys. I think it was Esman that put that question on the euro. Look at this one. Price made lower highs, and everyone, of course, lower highs and lower lows. And then here, the price made a higher high. Now, it didn't make a higher low yet. Sorry, here it made the higher high, not this one. So at this point, we have a higher high. What do we see? It's that the downtrend now is invalid. The downtrend ended, is not valid anymore. So if the downtrend is not valid, do we perceive this as an uptrend? The answer is no. It's the potential beginning of the uptrend. We don't know if it's going to be consolidation yet. We see the consolidation afterwards. But at this point here, guys, I like to call you traders instead of guys, because you are all traders here, and you have to believe that you are traders. At this point here, traders, the price made a higher high. It has these nice bullish candles, and we want to believe that an uptrend will develop. So how do we determine the uptrend? We determine by a series of higher highs and higher lows. And at this point here, the market chopped around. It didn't continue a higher high and higher low. Therefore, we say, okay, look, that's not an uptrend. The market is consolidating, and we better wait for a clear break of this high or a clear break of this low. And then we're going to look to trade accordingly. That's why I didn't trade anything here. How to determine the fair value price? Well, how do you determine the fair value price? The same way you just rename the fair value gap, and it's the fair value price. It's the same thing with the 3-candle formation. Same thing. Okay, the high of the first candle, the low of the first candle, the high of the third candle in a downtrend, or the high of the third candle and the high of the first candle, the low of the third candle and the high of the first candle in an uptrend. All right, same thing. Just if you keep using that's a fair value gap, then how you will address when the market really it's gonna gap? What gap it's gonna be? That one. Just it brings a lot of confusion. Okay, and I'm just saying that because of my profession as a certified market analyst, just to help you as much as possible. Another good trade, it was on Wednesday with the Great British Pound against the US dollar. The market here made a false breakout, a bearish engulfing here. That was 2-1 trade. And yeah, that was it. I clean out with the pound trading here. At this point on Thursday, I put this fair value price at this area after the market declined. So I was looking to get involved here. Entries, if you want to trade this and treat it as an order block, definitely I'm using order blocks in my trading, of course. Order block back. Yeah, understand. No, I'm using the order blocks, but I give names to the order blocks. I use only the order blocks they created by a bearish engulfing in a downtrend and a bullish engulfing in an uptrend. Only this kind of order blocks. I don't pay attention to these order blocks that they have pretty much equal body size, or the order blocks that they are inside, or weird things. It must be trading must be very simple and very structural. Okay, so this is what can I say honestly. You are very welcome. So next week on the Great British Pound, I will be looking honestly to go short, because if in the UK they will cut the rates, definitely most likely the Great British Pound will decline. But am I going to go short on the pound US dollar? Maybe not. I will prefer the pound yen. Why the pound yen? Because the Japanese yen, if you are watching my webinars for a while, you will understand that the Japanese yen is a bit strong across the board. Okay, last week, the Bank of Japan voted for interest rates. They kept their rates the same, and the Japanese yen didn't move much to the downside. So it shows that Japanese yen is strong. Now, Great British Pound, very sensitive, very weak economy like all the other economies. Japanese economy, it's strong throughout the years because all Japanese people in Japan, they are saving money into their banks. So just as informative as well, this is a reversal price action. It means most likely we're going to see move to the downside. And if this is going to happen and the market will follow through, definitely the this kind of lower highs and lower lows are very possible. So let's keep an eye on this one, pound yen. Another good trade we had last week, it was on the USD Swissie, because the price here, it created after the CPI report last Friday in Switzerland, then the market created this fair value price here, then it didn't follow through around this resistance area. It created this, let's say, dodgy candle, bearish candle. So I enter short here. I put my stop loss above this high here. And I was targeting the high of this candle here. That was, how much was that? 2 to 1. Yeah. I try not to get any trades lower than 2 to 1. Yes, Esan, correct. Which time frame you usually use to your setup for trend and entry? 1 hour for trend, 15 minutes for entry. If you're going to go with 15-minute time frame for entry, I suggest you to better look the 4-hour chart. If you're going to look, because the time between the hourly and the 15-minute, it's very close. So it's pretty much you see the same information in another time frame with a little bit of detail. But if you have the 4-hour there, it's more, it gives you, let's say, better time horizon to work on the 15-minute chart. Do you use a confirmation entry or set and forget kind of trade? Of course, I use confirmation entry. That's why I mentioned the candlesticks, that the bullish and bearish engulfing. Primarily bullish and bearish engulfing is what they make my trading. Okay, like another trade we had, it was on the it was on the Euro Great British Pound. The price, it created this kind of Wyckoff false breakout here. There were a lot of stop losses around this area. The market on Tuesday, last Tuesday, it created this break of structure, and one day after, it created a new market structure penetrating all the valid swing highs with these bullish candles, which means that most likely the market was about to push higher. And I saw this bullish candle with a long lower wick rejecting all the levels here. So my entry was there, my stop loss was below there, and I just went for 2 to 1 on this one, and I took profits up here one day after. Okay, so what about gold? Don't you guys want to check the gold tonight? So what's happened on the gold market? The price finally, I remember a few people, they asked me last week, what do I think about the gold? And I said that, as long as the price makes higher highs and higher lows, I'm just buying. When the market makes lower highs and lower lows, or a reversal price action on the weekly, then I will look to sell on the 4-hour or hourly time frame. So now the gold made a false breakout of the all-time high. Of course, it created a new all-time high, and it put it this dodgy candle here, which it's kind of, what's the name? It's the gravestone doji. If you look Steve Ninson's candlestick pattern book, So on the hourly time frame, on Friday, we had actually first, it started on Thursday. These bearish candles here were good enough to alert all traders that, hey, the market is about to move downward. So on Friday, we saw very small candles here, everything within this bearish candle. If you see the 4-hour chart, it's going to be much clear, because this bearish candle here engulfed all these candles here, inside candles. And then on the hourly time frame, it was my entry. I always use the Fibonacci, as you know, from the swing high to the swing low. I like the area between 50 and 61.8. The market constantly rejected the 50-period moving average and the 50-period and the 50% retracement. Why do I use the 50-period moving average? Because most of the hedge funds, they and the big funds, let's say, that they move the markets, they all, or most of them, they are using these 50-period moving averages. So please, if you just have some questions, just put it on your chart and see every time the price interacts with the 50-period moving average, how it goes, okay? And you will be amazed. It's not by luck or it's just a coincidence, okay? So the price here, it had an inner structure here, false breakout of these solid levels of resistance, and with a reversal price action here. And actually, that was the only 3-to-1 trade that I took. Okay, this one here, based on the reversal price action. Now, again, try to keep trading simple, guys. Took a look at the oil if you have time. Thanks. Let's just check the oil now. So the oil on Monday declined that much. It created that accumulation Wyckoff reversal pattern, and it moved upwards. Now, on the weekly chart, here it's a very, very strong area, a demand area here. All right, it's a very strong area of support. We don't know really if the market it's going to continue dropping, or if this long tail it's going to be the cause to push the price higher. This is the issue with this kind of reversals. Now, the price is in a downtrend here, but we have a short-term reversal. Are we trading this one long? And if yes, then how? The answer comes when we understand that this is called a failure swing top pattern. If this is a failure swing top pattern, then the market ended this uptrend here. So if we want to go long, we have to wait for higher highs and higher lows. All right, that's the issue. When the market is in a transition period, we don't have clarity. We are rushing to trade in the opposite direction because we are thinking that, hey, we want to be the first to take trades. But what I find out after 12 years of trading and being a coach for traders, that when traders, they see an uptrend in a development, they are scared to press the trigger and take the trade with a trend. Most of the traders, they have the tendency to always want to go against the trend. After they saw the move, okay, now it's over, so let's go against it. It might gonna reverse. Okay, it's normal. Every trader goes this way at the beginning of their trading career, and it's fine. No, and I believe that gold, it's going to go down now because of the reversal. But we also have the presidential elections. We don't know how guys, now in the world, there is political, there is geopolitical, and there is financial crisis. So there is also the presidential election. Also the BRICS, I believe everybody knows what the BRICS is. They created their own currency. all this they are bringing a turbulence in the US dollar, and this is the only week that, if you saw so far, I didn't say, okay, let's try to work with the majors, because the majors, they involve the US dollar plus the FOMC minutes plus the Fed interest rate. They make it a little bit hard this week for looking at the majors, okay, especially on Tuesday. For example, the Euro Swissy, the price made here a higher high. So on the hourly time frame, if you see price makes higher highs and higher lows, if it's going to maintain this formation and the price won't drop below these low points here, then definitely we're going to keep looking for long positions, okay? So keep that in mind. Euro Australian dollar, yeah, it's playing within this range here. So are we buying? Are we selling? I'm not really sure. Market is in range for a reason. This one, I like it, to be honest. The EuroCAD, last week we said that we are looking to go long on the EuroCAD on the lower time frames, but I didn't get involved with this one because honestly I had a lot of trades going on. I didn't have the mental power to add more currency pairs into my daily watch list. So the price rejected at the resistance. Maybe it's gonna pull back a little bit. Don't know if it's gonna continue with this one again. It should have break above the resistance here. All right, we don't know what's gonna happen. Great British Pound, it's better if we're gonna look for, let's say, short positions because of the weakness of the Great British Pound. Okay, the Australian dollar, on the other hand, it might gonna be a strong currency this week because the Reserve Bank of Australia, the RBA, they want to keep their rates at the same 4.35%. If they're gonna keep the rates 4.35% and the Great British Pound and in the UK on Thursday they will cut the rates, definitely we're gonna have more pessimist on the sterling rather than optimist compared to the Australian dollar, and most likely this market will drop. Okay, do you guys understand this? This is a solid trading plan, and please try to use it in your best interest next week. Pound CAD, look at this doji after doji after doji, 3 dojis in a row at resistance. Don't know what's going on there. The focus, I believe, should be on the commodity currencies. For new traders here, commodity currencies are the New Zealand dollar, the Australian dollar, and the Canadian dollar. So if we're gonna, these are the less currencies we expect them to be very much affected by what's going to happen the next week in the markets. Okay, so maybe it's going to be safer for us because we are smart traders to look for opportunities among these currencies. Okay, Aussie Swiss, New Zealand Swiss, maybe this one for long because last week we had this bearish candle here around support, and few weeks ago, and last week the market didn't really follow through. So I'm more bullish on this one here, right on the hourly time frame. As you see, the price now started making higher highs and higher lows. So there is a confirmed uptrend here, higher highs and higher lows. So if you are using trend lines, you will see at this point here, there is a good interaction. If we find reversal price action around this point, definitely we want to take advantage of that and go long there. Okay. Tim asked, I miss your gold review. Where do you see gold going today, tomorrow? I see gold a little bit on the short side because of the weekly price action, reversal price action here. So I believe that based on the technical factors, we see gold for retracement. But based on political and geopolitical and the presidential elections in the US on Tuesday, we're going to put a question mark next to the gold. Okay, guys, ladies, gentlemen, boys, girls, understand something. In the markets, there are what traders they need to understand is that the price of the currency pairs or the price of the gold, of the US oil, or any tradable asset in the market, it's gonna move because of the fundamental news. But we don't really care how the fundamental news they're gonna move the market. We don't trade the fundamental news, but we need to accept that the news will move the market. The consumer price index report in the US will move the US dollar at that particular moment. The interest rates in Australia, they're going to set up the pace for the Australian dollar for the next couple of weeks at least. So if we understand that these things, they affect the market, and we just learn only basic stuff, not something extreme. I don't want you to be an analyst. I do it by profession. I'm an analyst. To be an analyst, it's a different thing than to be a trader. Analyst, it's A, trader, it's B. There are two different things. So don't mix them together. I keep them separately. The analysis is one thing, trading is another thing. Okay, and you need to understand that if you ever get yourself start getting into the analysis paralysis scenario. Okay, so yeah, of course, follow the chart, not your heart. Absolutely. Trade what you see and never what you think or what you believe. Leave your belief where you don't put your hard money earned on any trade. So on the gold, the market, let's go on the hourly time frame, for example. On Tuesday, on Wednesday, on Monday, the market was making higher highs and higher lows. I was a buyer on the gold on these time frames. I didn't trade here the gold, but if I was trading the gold on the hourly time frame, I would have been a buyer here because the price makes higher highs and higher lows. Usually, the last trade of the trend, as a trend trader that I am, the last trade we get it wrong. We lose the last trade because we don't know when the trade will end. Okay, so but after we saw these bearish candles here, look at how long are these candles. They are the longest candles you can see on the chart. If you zoom out, I don't know, too many months. Okay, so the market is telling us something here that, hey, I'm about to come down and come aggressively. So if the price makes continue for as long as the price makes lower highs and lower lows, from now on, I'm looking to go short. Always put your support levels in place. Don't try to be the smart person in the market and to try to sell at support because you believe that, hey, it's time for this freaking support to break and I'm going to make a fortune and this is going to be the trade of the year and the Fortune 500 magazine will talk about my trade 2 days later. No, don't try to go down to that path. Okay, just become a disciplined trader and you're going to see results that you want to see in a better way. We have support areas, draw them, add them on your chart and trust them. Okay, So next week, try to focus on the cross pairs, try to focus on the commodity pairs. If you're going to trade the majors, don't go, in my opinion, and what I will do, I will not go full size. If you trade, let's say 0.02 lots per position, maybe for this week, maybe you're going to cut a little bit when you trade the major pairs, because, and especially during the overlap sessions, man, we don't know how the markets are going to go. Okay, not every week created equal in trading. That's why I'm here to explain you this stuff after 12 years of active trading and make sure at least you are aware of this stuff. Okay. Why don't you trade indices, and what's your view on Bitcoin? How many things to trade? I mean, I also sometimes I trade indices. It depends. Okay, it depends. Bitcoin. This is a 4-hour bullish engulfing order block. I did the analysis actually yesterday on the Bitcoin, and this analysis will go to another hedge fund tomorrow. And I did it on the 4-hour time frame. Let me show you. I put a couple of indicators here. So we have this swing high. Price makes higher highs and higher lows, so it's more bullish than bearish. At this point here, we have this bullish engulfing order block, so I marked it there. We have also the 61.8% retracement, and we have the previous week's lows here. So this one here, it's a great area for buying. And you see the price, the market it's active now. The price entered here, moved sideways, got rejected, and it looks like that it's bouncing off. Let's see what's going to happen. Now, if the price continue moving upwards, this fair value price here, or if you want to say the fair value gap, is actually here. That was on Friday. So it can act as resistance. This 4-hour bearish engulfing order block here also can be a solid resistance for the price. So let's see. But based on what's happening around the world, the weekly view, I believe it's going to be more bullish than bearish, without being sure and without knowing what's going to happen. Okay. All right. I think that's all from me today. We covered a lot of stuff. It's a little bit different week than other weeks, and you're going to see it next week as well. We're going to have a lot to see what's going to happen actually on Tuesday, on Wednesday, how the market will digest the presidential elections. Understand, if you are new in trading, you're trying to bring your head around and to understand why these guys saying about these presidential elections, because they're going to bring turbulence in the market. And yeah, just have a great night. Get some rest for the rest of the night. If where you are, it's still some hours left. Here it's almost 10 p.m. So trade, I was about to say drive. Trade safely. Manage your positions, manage your risk. Okay, and I'm sure you're gonna doing great. So I appreciate every single one of you here. Thank you so much for tuning in. Myself and of course the Elevating Forex team, we are here to provide you with everything you need to be a successful trader by your own. All right, and I wish you best luck, and of course I will see you all again next Sunday. Thank you everyone, and have a great night.